professors have been telling you to accumulate crypto. We told you which ones to accumulate, and we told you why. Now the price is going up, everybody's making money. You could have had these tips and you could have learned how to make money in a very easy way, in a very simple system for $49 a month. But you didn't sign up because you thought you were too smart. You're an arrogant idiot who thought $49 a month is not worth the investment. Instead, you're gonna save your money and now you're gonna lose out on thousands because you're a dummy. You know what? You're never going to work it out by yourself. You need people around you. You need perspicacity, which is amplified by your network. You need people who know more than you do. You need teachers. You need people to work beside to motivate you. We're living in a transitional period where the matrix is broken. You can start off at the absolute bottom echelon and you can end up at the highest echelons of masculine capability like I have. All you have to do is genuinely try for once in your life. When I meet somebody who's my age, who is still poor, I know it is their fault. They have some kind of personality defect. There's something wrong with them. They don't have any motivation, or they're depressed, or they tried to do it by themselves because they're an arrogant idiot. I don't do anything by myself. I do everything with my team. I have a team of 110 people who work for me. I have my closest advisors. I have the war room with 4,000 people in it. I have Hustles University with all of the professors, 18 of them. I talk to them all day, every day. Every single time I'm making billions of dollars, I do it with other people. I don't do anything by myself. Every single thing I do and all the money I make is done with other people on my team. And you, Mr. Nobody, with no friends, thinks you're gonna pull off better than us? You're gonna be destroyed for the rest of human time. Anyway, off for lunch.
GM my G's, what's good? Good morning or good evening, wherever you're from. It's your man, Professor Adam, back at you again with another investing analysis live stream. So, I hope you're all handling this dip okay. I have some excellent news for you. I don't know if you know this or if you're fucking aware, but everybody is still up loads from where we ended up getting into the market. So if you're watching this and you're like, oh, Adam, but I came in late. Well, you should have been here while we were getting the pumps. Where were you? Had you done your lessons? No. Were you here? No. But anyway, I digress. On the shorter term, I know why you're all here and I know why you're tuning in today. It's because you're all panicking. You're all freaking out. You all want to know what the fuck is going on with the market. Oh no, Adam, is it going to go back down to fucking 10K? Is that what Bitcoin's going to do? 10K is its destiny? You're all looking down here thinking, oh, it's going to continue to decline and we're going to go into oblivion somewhere around this red line here. 24K. I don't actually even know what that red line is for. Might delete that. But anyway, I'm going to just get straight into it. I'm just going to get straight into it because I know you guys love that. I know you love it when I don't fuck around. So I'm going to tell you what I think. This yellow line here is literally an extrapolation of the short-term realized price. What I did is I went onto this page here. I got the realized price and I got a couple of price points of this most recent run-up and I just ran a line through it. I just ran a line through it and I put that on the chart because every single time I've mentioned in all of these other previous investing analyses that you should have been watching. And I shouldn't need to re-explain myself every single fucking day, but I will anyway because I know you're all extremely bad at maintaining good habits like tuning into Investing Analysis Daily. Zero line resets in a bull market, of which we are in currently, normally consist of bounces off the zero line, and it just continues to go straight up. We have multiple examples of this occurring. Now, sometimes it hits the zero line, and it continues to go down just a little bit more. Sometimes it doesn't even reach the zero line. Of course, that right there was a very speculative bull market example. The phase we're currently in is very much pre-bull market phase, so somewhere around here or there, depending on which bull market cycle you like to use. So, whether we are in this type of environment where we're early and we may be destined to go down to the orange or at the zero line, currently, I believe that with the liquidity state that we're in, which remember is the primary driver of the cryptocurrency market, the primary driver, we are consistent with what I would say is a mid-stage bull market. So something like that, or that, in my personal opinion. My opinion, right? So that's what I believe we're currently going through. And as you can see right here, well, this thing was updated an hour ago. Ah, excellent. Is that today? Hold on. Bear with me while I just open this back up again. sometimes it doesn't appear correctly. January 22nd. 39.1K. Okay. So it appears my estimation might be slightly off. Now that would be one incremental dot further over per day. So maybe it's a little bit lower than that. Maybe it's like this. So anyway, that is my estimation of where the short-term base of this dip should be, based upon the context of short-term profit during previous bull markets, of which we're in positive liquidity environments, of which we currently are. So what I would expect is something around this line. Because remember, the ratio can go either to 0 and slightly below it, which would consist of price under realized price, to be somewhere down here before resuming its uptrend again. So that means you could see prices somewhere below this fucking line, somewhere along here. This could be a consolidation sideways. So this could be price sideways into that area, or it could be price nuke down followed by a fast recovery. So be prepared for all circumstances. And don't lose your shirt if such a thing were to happen. Of course, it could also be a slight upwards bias, which doesn't pump for a very long time and then kind of goes up after the Chinese Lunar New Year, which would still give you a ratio below 0. But of course, that is probably unlikely. So that is what's happening in the short term. And really, I'm not too concerned because we have had a new Global Liquidity Watch update, which confirms that liquidity is rising, but it has stabilized at the current level for the moment. So let's go through it together, because this is, of course, the most pertinent part of our investing process. We need to know what's going on with global liquidity. So global liquidity levels have stabilized at 169 trillion, comfortably above the 166 weekly average recorded in 2023, and also above the peak of 168 when the Fed stepped into financial support markets after the time of the Silicon Valley banking crisis. The chart below points our weekly measure of global liquidity growth derived from central bank balance sheet data. The pace of expansion has accelerated coming into the new year. Latest data record a plus 12.3% 3-month annualized rate. The chart further illustrates that quantitative tightening ended in October 2022. At that point, global liquidity hit a cycle low of whatever that was. Two factors have held it in check. First, the divergence of central banks. While US Federal Reserve and the People's Bank of China have been injecting liquidity into money markets, the ECB and the Bank of England have been tightening. The other major banks, the Bank of Japan, has kept liquidity levels stable since last April. Second, the increase in volatility in bond markets, which have negatively affected collateral values and hence liquidity levels. The two are interlinked. More central bank liquidity and will quell volatility in bond markets and underpin collateral values. We expect liquidity levels to continue to rise through this year before peaking in late 2025, which of course would be our cycle bias. Now, going into the weekly growth in global liquidity, you can see that where we are currently is a long way away from max rate of change where we could potentially go. And also, it's a long way away on a 12-month annualized basis from peaking out as well, like being in these phases here, where we are in like a late kind of cycle. Now, I don't know how many of you recall this. I really hope that you were all around for this, but I know many of you are exceptionally lazy individuals that can't be bothered to show up every day. But I did a conceptual study on this chart where I looked at what rates of change correlated to what points in the market and what that looked like for liquidity. And I determined that it was only under circumstances where you had a large gap between the 3-month rate of change and the 12-month rate of change, like, for example, there and there, there and there, there and there, there and there, and there and there, that you had significant increases. Probabilistically speaking, out of the samples that I took, you had significant increases in the fucking price change of Bitcoin. But also, there was further context in there as well, where I also found out which of these circumstances were early cycle compared to Bitcoin and what that looks like. And I think that this was revised downwards from somewhere that was up here down to here. But still, that is a great rate of change. And my personal bias, especially with the China Lunar New Year pump, is that this number should be increasing. And I actually have a few tweets to reinforce this. So before we actually go on to the rest of the letter, I'm just going to quickly flip to a couple of tweets that I think are relevant here. Now, Julian Brigden was mentioning that Chinese stocks have got some issues. And what does he say? If this chart of the Shanghai Composite Index is any guide, it's not looking good. Now you can see here in this picture that the Shanghai Composite is starting to take a bit of a dive. Now, you would be insane to think that China isn't looking at this, and they wouldn't be looking at their stock market and going, okay, what are we looking like internationally? What are people actually voting with their dollars saying about our country on the stock market? Because that's also another reason why countries care about their stock markets. Now he's saying, as the sell-off accelerates, the Chinese premier has called for more effective measures to stabilize stocks. Let's see if that works. Now, then I see this tweet from Octavio Costa. China's printing press is busy. The People's Bank of China just added 150 billion to its balance sheet in December. This brings the total increase to almost 850 billion in the last 5 months. But look at the behavior. Look at the behavior of this chart. Now, I don't know if you're seeing what I'm seeing, but I'm seeing like decline, pump, decline, pump, decline, pump, and like gradual declines followed by pumps. And where is this leading into? I mean, it'll probably, we may have something like that before another large one. So it's like you may have a little bit of printing to save the Shanghai Composite in the short term, maybe just a little tiny bit, but that will save the bazookas for early Feb, which is over here. They'll save the bazookas for early Feb, and they'll give it another one of these, in my opinion. And that would do a lot of good for the crypto market. I mean, what you're essentially seeing here is a lot of Chinese money tends to flow into crypto for some reason. I mean, it's also a very large economy, so that's probably another reason why. But what you're seeing here, doesn't this look like the crypto chart to you? Like you've had a massive pump from August, September. Like that should be fairly clear. Where's total? From August, September, and it's been up only since then. Followed by a major consolidation here. I mean, even this sell-off in late July, early August looks exactly like the crypto market. Look at that. It's fucking ridiculous. Anyway, so what we're expecting is that People's Bank of China boost in the new year, and that's in the Lunar New Year, and that's also partly not just because of structural issues with their economy and stuff. I mean, it's all linked, but also to save the stock market. The timing is just ideal. So basically what I'm trying to tell you is that with the current rate of change or the projected balance sheets or liquidity provided by the Federal Reserve, which we saw in yesterday's investing analysis, in today's investing analysis, I'm telling you, there are incentives active right now that are going to also send China liquidity higher. Now, what do you get when you get a combination of the two largest nations on earth printing? The Federal Reserve, both running down their reverse repo and they're also, the Bank Term Funding Program, cranking those like a motherfucker, trying to outpace the quantitative tightening done on their actual balance sheets, which everybody is watching now. See, that's old news. It's the reason why the shadow monetary base and alternative measures of liquidity like collateral values and stuff that Michael Howell goes through is so important. But that is going, I mean, if you've got the two largest economies who need, like China needing to save their shit and the Fed also trying to stimulate into an election, you honestly think that this rate of change measurement isn't going to be significantly higher than here? Like both on a rate of change and a nominal basis? You'd be fucking crazy to think that. So, fuck those off because we've already talked about them. Personally, I think that the way I broke that down was quite important for everybody to understand. I think that's one of the most important things you could possibly understand. Collateral values have recovered and bond market volatility has eased in the last few weeks. Measured by the MOVE index, volatility has dropped to around 105 compared to 127. Yes, so that is still a little way above its long-term average, but it's still kind of coming down a bit. The liquidity boost from the Fed has clearly helped, but more is needed, of which it will come. The chart below plots the growth of the world shadow monetary base. It slipped last week at about 12%. In nominal terms, the SMB, blah, blah, blah. Yep. This is largely due to the People's Bank of China, but the effect is being compounded by lower ECB, Bank of Japan, and Bank of England liquidity. The US Fed stands out as continues to add liquidity to the financial system. Since the start of last year, Fed net liquidity has risen by whatever that amount is. So you can see this is a highly volatile time series. It's kind of moving around a little bit at the moment. Wouldn't be surprised to see that kind of come back a little bit and maybe just continue back upwards. So what else do we have? Yes, the next chart plots the measure of weekly global liquidity against the MSCI World Index. It shows that the recovery in liquidity levels have been accompanied by an improvement in risk asset values. So you can see this is the nominal chart, the nominal value of global liquidity there. You can see how the rate of change hasn't really been very high. That's what's represented in this week's release, is that the actual level has not really changed by much, but still there is high liquidity there. So yeah, and then they talk about risk exposure for investors. So it's nothing really major there to talk about. So that is the most pertinent stuff there. I cover 42 macro stuff a little bit later, but what I'm going to do first of all is go through the alternative data that I look at, which is a little bit shorter term stuff, so that we can figure out maybe what cryptocurrency is doing or what risks we have. I've already covered short-term holder realized profit and loss, and this is the main one. Can I make this fucking thing wider? Yes, I can. Oh my god. I am currently in a euphoric state. Fuck yes. Oh, okay. Right, so decent trader liquidation map, one of the first ones I like to look at. Now you can see that what's interesting is that even at the current level, and before I go too far ahead with this fucking investing analysis, I have to show you this. Look at these short-term maps for Bitcoin and Ethereum. Isn't that the most ridiculous fucking liquidation map you've ever seen? Everything is gonna have a massive recovery today. Massive in the context of, you know, whatever this dip is. Might go back to range highs like 41.7 before. What is that? Maybe. If it can make it back up to 41.4, that would be pretty impressive. But anyway, so that actually might resolve itself while we're doing investing analysis because it's so short term. Anyway, so the decent trader liquidation map, you can see that we actually have a little bit of size below current price. But again, I will stand on my previous statement where I've said that I don't think that this is enough juice to really send it downwards. If we go down, it's not going to be because of this. Like maybe it might give it a little bit of compulsion, but not by very much. It's going to be an extremely weak, almost imperceptible effect. That's not really going to have too much of a push on price. I highly doubt, very, very, very unlikely that we take out these levels here. Very, very unlikely, especially with everything that I've told you about current liquidity and how far away these are from current price. I mean, if we were to go down, you would eventually hit 31. But what's the probability of hitting 31? Really? All the way down here? Like, fuck off. There's not a chance, man. Especially if they're printing. It's what, maybe, like, what kind of systematic risk or systemic risk in the crypto market could possibly cause such a thing before February? or grind down into it like that. What the fuck could possibly cause that? I don't know. There was talk about FTX, I think, in here somewhere. FTX selling Bitcoin ETF, Bitcoin through Grayscale. But this thing here, and I haven't looked into this yet, it says FTX sold, implying that it's already finished. That's already finished selling. So that's bullish. Yeah. Yeah, see that to me, I mean, assuming that this wording here is correct and it's sold and not selling, that's actually bullish in my mind because it means that whatever reduction in strength of the market that you've seen so far has been entirely due to FTX dumping and not at all due to any lack of organic demand. Because you can see this through the ETFs, that on a net basis, there has been an enormous inflow of capital into all of these ETFs. And OGs are ready for the halving, so they'd be loading up as well. So very, very difficult to see any potential negative catalyst there. I've already covered that, including Solana. Might go to the 30-day on Bitcoin here, just for the lols. So it overloads up. See, it's still looking quite bullish. Right, now let's look at QuiverQuant. I realized yesterday the sentiment was below the little video of me on the bottom right-hand corner. Beautiful to see sentiment low. Lower prices and lower sentiment, especially when it's this fucking low, like super, super low, is great. Also, you know what I realized the other day when I was looking at this? When you have all of them selected at once, what you actually have is kind of a way of determining where the zero line here is, because this doesn't appear normalized to me. This isn't normalized. This is like I don't know what the fuck type of random measurement this is, but you can see approximately that the equilibrium level for all of these assets is about 0.75. So 0.75 is kind of the midline for these sentiments. Seems a bit high on the Bitcoin one. I would place it a little bit lower because you've got this range here, right? And to me, the center of that looks maybe like 0.74 or something. But anyway, how far below it is right now, and all of these right here, you can also see that there's actually a divergence forming there. So maybe that's part of it as well. Because you know I love my divergences. Could be an indication that we're actually seeing an increase in sentiment the lower down it goes, or more capitulation of some sort that could be bullish. ETH down as well. Beautiful to see. I love that shit. And that hasn't been updated. I had a look at that. Got my two favorite metrics here, and I mean it's just a full cycle valuation, so nothing to talk about there. Sentiment, nothing to talk about there. We've already spoken about that. Very happy with that. Can't wait to see tomorrow's measurement for that. Tomorrow's measurement for this is going to be juicy. Juicy. Short-term MVRV, not really, I wasn't really expecting to see that return to its zero level. If you pull this up, can I maximize this? Fuck. No, okay. Anyway, you can see with this particular metric, I can't change any of it. Anyway, you'll have to squint and look very closely. What you're seeing here, and this is one of the reasons why I originally included this metric in my long-term TPI, look at how the short-term MVRV at no point during the last bull market or the previous one did we have a sustained reading below the zero line, whatever that is. No, none, never. I don't consider that to be a sustained reading below the zero line. It just kind of got close to it and then just fucked back straight off again, including these ones over here, which didn't even really touch it. So how far are we off that current line there? I mean, the latest reading today, which says the average BTC price was 41K, I don't think is using today's data. I think it's using yesterday's data. And I think that this reading would actually be, I don't know if the word substantially lower than that would be appropriate, but it's very fucking close. Very, very fucking close to that midline. And like I've mentioned previously, we are not in any other market environment. We are in a bullish market environment. That is the market environment that we are in. Of course, it's in an early phase, so whatever context we can get to it there. But that is the type of behavior that I expect to see. Just close to the MVRV short-term midline and then straight back out again. How could it do anything else? Anyway, see if there's been an update in the Capriol BDC futures heater. No major change there. But you know what's interesting? Look, the price went down and it didn't go anywhere. It just went sideways. That's cool. That's fucking cool. Again, it's the same shit that I look at the fucking live stream numbers. 1,200 people. This is typical shit. When the price goes down, nobody wants to show up and do the research. And when the price goes up, everyone goes, "Oh, is it too late?" Idiots. Look what I told you. More powerful pumps, progressively closer to the bottom during a bear, bull bear, and then back in bull again, more powerful pumps. Price has gone down, and the open interest weighted futures heat metric didn't decrease. If that just goes sideways for another 2 days, like I'm just estimating, another 2 days, you would get your midline reset on the short-term holder MVRV, and you would get your zero level or maybe even a tiny little dip below that on your short-term holder realized price profit and loss metric, and you'd be done. And that is the time to go 100x long. I'm almost joking, but at the same time, I'm kind of not. You don't understand how bullish I am. This is the fucking shit that you've been waiting for. For any of you degenerate gamblers out there, these are the droids you're looking for. Right? These are the droids you're looking for. Now, I don't want to see anybody out there turning into gamblers. What I'm trying to tell you is that if you have been holding out on your Tauros leverage tokens, fuck, bro, now's the time. Now's the time. Well, maybe not today. Maybe, I don't know. It's hard to say because as you saw, those CoinAnk liquidation maps are slightly biased to the upside. I would divide whatever I wanted to allocate to leveraged holdings, and I would maybe divide it in 3 and just be like 1, 2, 3 or something. I don't know. I might actually change the fucking SDCA dollar cost averaging recommendations to like 1 week at this point because price is so low and I wasn't really expecting this. That's what I will do. Please, somebody remind me of that if I forget to do it today, because I think that would be a responsible choice for myself and for anybody else. Ah, yeah, it's good to see. It's good to see Google Trends has recovered. What a fuck fest. What a fuck fest. And you know what? I think that these live stream numbers represent these Google Trends numbers as well, because these live stream numbers, you fuckers, we should be like 1,400, 1,500 live right now, but we're not. And I think that shows that these Google Trend numbers are accurate because everyone's retarded and they do not understand just the opportunity that is available to us right now. Cool to see that updated. All right, so we have all-time highs in the S&P 500 with negative breadth, which has kind of been reflected in the dispersion index from 42 macro as well. Cycle metrics. Yes, I wanted to cover this one as well. So the inter-exchange flow pulse, unfortunately, has taken quite a hit today. So as one of our preferred long-term metrics, which is quite nice, it's very bearish. And unfortunately for us, this metric tends to have quite a high turnaround time. So that is probably the only major thing that it makes me concerned. I would love to not have that metric so far below its moving average. And I'm not entirely confident that it can provide a fast recovery, just judging off its like historical behavior. But you know, it is what it is. We'll keep an eye on it, and nothing else there is really relevant to us. So I'm going to shut that down, and I'm going to close that as well. So we've pretty much covered that stuff, and we'll go into the lead off morning note now and just see if there's any information here that's relevant to us. I had a quick read through it before, and I'm not entirely sure. There's a little bit in here, but not much. So Bitcoin's still a maximum long in their discretionary investment ideas table. No change to the weather models or any of the composite signals that are relevant to us, from what I understand. Is the VAMs for Bitcoin and Ethereum. Ethereum is actually a lot lower than where I expected it to go. So as you would have recalled in yesterday's one, I was thinking that Ethereum may go to the top of this range. But as well, you know, nothing really goes in a perfectly straight line. You could perhaps see this come back up. Like that is its correction. It goes like down and then comes back up. And that kind of in its whole context is the correction, rather than just kind of going to whatever that is. It's like volume weighted average price is like closer towards that line. But whatever. I mean, we've seen the liquidation maps. It's likely to revert today. And whether that continues to decline and then goes back up again, whatever. But within the range, within the area that this is at, I don't see this moving out of this area. I think much, much higher over the short, medium, and long term. Personally, I don't see any circumstance where that can go significantly lower. At least not in the current market environment. Now, this is another thing that's probably worrying me a little bit, dispersion coming down, which is generally reflective of global short-term risk off sentiment. So unless this hasn't been updated in a while, which I think maybe it's been a little while, I'm not entirely sure. If only there was a way of knowing when the last date that this was updated. Oh, it says, oh, okay, 22nd. Anyway, I'll check back tomorrow, and I would be willing to make a bet that this was a little bit lower. But it's not really close. It's not super closely related to the crypto market, more just the S&P 500. So I think now that it's gone above its all-time highs, or cycle highs, no, all-time highs, that it's probably going to come back down and go back up again. I should probably remove all this stuff about the recession there. The recession is not happening. The recession is canceled. Oh man, there's so much stuff I could talk about. Liquidity is still in an uptrend. These are the main ones that you need to be concerned with. Nothing else really matters for crypto except for these. And that, I mean, I don't know. Personally, I think Darius has missed the target on this one. If we were still in a bullish Bitcoin macro weather regime and we had this dip, I would be like bellissimo. Like that is golden, and he's locked it in. But I think his approach has like missed the mark here. Should be majorly bullish. At least it's still 50% long, because technically a neutral position in the weather model is 50% long. Yep. Cool. And that's real economy stuff, so we're not looking at that. And I think some discussion about China was in here. But yeah, nothing much major. So, all right, what other tweets do I have to talk about? Rip Ethereum bull market. That's hilarious. We talked about that. Unlikely that Bitcoin finds its footing, from Jim Cramer, and we all know the reverse Jim Cramer trade is basically a 100% hit rate. So very happy about that. Now, just some context. This tweet from Charles Edwards is fantastic. What does he say? It's been over 232 days since Bitcoin has had a 25% drawdown in the prior 12 months. The last time this happened was more than a decade ago in 2011. The current low downside volatility period is not normal. These dips usually occur every 2 to 3 months. Volatility will return. So 25%. Let's have a look. What constitutes 25%? and let's contextualize it. Cool. So that's 25%. So you may, I don't want to say that we have to have it, because that would also go against my belief that Bitcoin has lower volatility into the future. So both the pumps get shorter and the dips get shorter as well. And we kind of have this volatility compression effect over time. But is this 36 level, does it have to get hit just because that's what Bitcoin does? I'm not entirely certain, especially based upon the short-term realized profit and loss and the MVRV metrics. I don't think that it's really required. But if it did, I think, boom, and then straight back up again. I don't think there's any reason for a dip to be sustained. If we went down massively and we were back down at these levels again, do you think I would be panicked? No, not really. I mean, of course. Wait, do we still have... we still have positions on in the RSPS. Should have taken those off. Anyway. See, I make mistakes all the time. Hard for me to remember to run strategies that I'm barely invested in. It's one of the reasons why you guys need to have your own. Cool. All right, so that's pretty much everything that we need to speak about. Now I'm going to move into the chat channels and have a chat to the students and answer some questions. Now, I know for a lot of people that have the investing analysis section done, I encourage you to stick around, because generally we also cover a lot of extra analysis during the question and answer session. So let's get into it. I brought this motherfucking dip and also loaded, lump sum invested the remainder of my cash position. Nice, chilling like a villain. Good man. BTC guaranteed to go. Retard. No, nothing's ever guaranteed. I mean, probabilistically speaking, it's the best probability you can ever get, but nothing is guaranteed, bro. Black swans happen all the time. My net worth may go to zero. Okay, I'm prepared for that. He has internet problems. Who knows? How's it going? Oh, fuck, it looks quite bad, doesn't it? Internet go burp, prof is lagging. Lag is crazy. Everybody, you're saying it's still lagging. No, it's come back now. Looks like it's coming in and out. Hold on, guys. I'll just see who else is on the internet. Yeah. Yeah, sorry guys. I don't know what's going on with the internet. It looks like it's pretty fucked up, this whole stream. So hopefully once I cancel the stream, it'll be all right again. Adam's liquidity. All right. Yep. Good. Right. So BTC and ETH long terms. Yep. Today I received funds from selling my house. Congratulations. Today I plan on invest 90%, which is about 85% of my net worth of the funds, which equates to about 200K odd by DCing 20K a day until I'm fully allocated. As I've seen my SDCA reading creeping higher and higher over the past week. The way that I am planning on setting up my portfolio is 95% SDCA and 5% RSPS. I was going to do the Taurus leverage at 3x. Also was going to set up 3 accounts, 1 for RSPS and 2 for SDCA. I want to know if you think this is appropriate plan moving forwards, and if you have any suggestions. No, it looks fine to me. Yeah, it looks fine to me, man. Looks good. Yes, so when you said today I plan to invest 90%, I thought you meant you were going to LSI today, but that's obviously not correct, is it? So, yeah, no, that's pretty good. I think 20K a day might be a bit slow. But it's still good. Very good. Yes, the BAMF in, BAMF out. Yes, XRP. If you had 10,000 pounds, what would you buy in crypto? I would buy 9,900 pounds worth of coffee and do the fucking lessons. Still having difficulty with notifications. Yeah, cool. Yeah, listen, guys, I'm going to cancel the stream here because obviously it's lagged like a motherfucker and everybody's probably missed a whole bunch of stuff. So the faster that I finish this stream, the quicker everybody can get investing analysis out to them. Remember how I contradicted your stay long signal? I told you so. Sorry, just had to say it. No, I don't remember, but good for you. Slide 19, Omega ratio, not the same as your demo. Please give a quick demo of the Omega ratio. It's fucking simple, man. It's very, very obvious. You just pull up the Omega ratio on the indicator. I know you don't need a demo. Just use your brain. Laggy, yes, cool. All right, yes, I'm gonna cancel it here. All right, thank you very much, guys. Love you all. I'm going to upload the fucking recording immediately for you all. So love you, peace out. Please give love back to your community. Help all the new students. Everybody needs our help, and stay calm out there. Don't fucking panic. So good on you guys. I'll talk to you later.